Dow futures just dropped on breaking Iran news, and tomorrow's CPI report could either joe this market or send it into freefall. If you're not paying attention right now, you're making a mistake. Here's what I'm going to give you in the next 6 minutes. The exact reasons futures are tanking tonight, what the Iran situation actually means for your money, and the CPI scenarios Wall Street is gaming out behind closed doors. Stick with me. This is the briefing your broker won't give you. Let's start with what just happened. Dow futures fell sharply after reports of escalating Iran tensions hit the wires. We're talking a market that was already whipsawing, up 400 points one session, down 300 the next, now getting slapped with geopolitical uncertainty on top of everything else. This isn't random noise. This is the market screaming that it doesn't know what to price in. And when the market doesn't know what to price in, volatility becomes the only certainty. Now here's where most people get this wrong. They see Iran news and they think oil. Yes, crude is spiking, but the real contagion is in risk sentiment. When geopolitical headlines dominate, institutional money doesn't sit around analyzing fundamentals. It de-risks. It sells first and asks questions later. That's why you're seeing futures bleed red across the board. Not just energy, not just defense stocks, but broad index pressure. The algorithm-driven funds that dominate modern markets, they're programmed to reduce exposure when uncertainty spikes. And uncertainty just spiked hard. But here's the pattern interrupt you need to hear. This Iran news, it might not even matter by tomorrow afternoon, because there's a bigger catalyst sitting 12 hours away that could completely override tonight's sell-off or accelerate it into something much worse. I'm talking about the Consumer Price Index report dropping tomorrow morning, CPI inflation data. This is the number the Federal Reserve watches to decide whether to cut rates, hold steady, or keep squeezing the economy. Let me give you the scenarios. Scenario 1. CPI comes in cooler than expected. Inflation is trending down. Markets rips higher because traders start pricing in rate cuts sooner. All this Iran fear? Forgotten. Risk on mode activated. Scenario 2. CPI comes in hot. Inflation is sticky or re-accelerating. Markets tank because the Fed keeps rates higher for longer. Now you've got geopolitical uncertainty and a hawkish Fed. That's the double punch that breaks portfolios. Scenario 3, and this is the one nobody's talking about. CPI comes in right at expectations. Sounds neutral, right? Wrong. A neutral print means the market has no catalyst to resolve the Iran uncertainty. We stay in chop mode. Volatility persists. The whipsaw continues. So what is smart money doing right now while you're watching this video? They're hedging. Options activity on SPY and QQQ is through the roof. Put volume is elevated. Not panic levels, but definitely cautious positioning. The VIX, the fear index, is creeping up. These are professionals saying, I don't know which way this breaks, but I'm not getting caught flat-footed. Now, I'm not telling you to panic sell. I'm not telling you to buy the dip either. What I am telling you is that the next 48 hours are a decision point, not just for the market, for you. If you're fully invested with no hedge and no plan, you're gambling. If you're sitting in cash waiting for clarity, you might miss the move entirely. The key is having a framework before the number drops. Here's my framework, and you can steal it. I identify my max pain threshold before volatile events. I know exactly what price level triggers my stop. And I have dry powder allocated specifically for asymmetric opportunities, those moments when panic selling creates value. That's not financial advice. That's risk management. And risk management is the only reason long-term portfolios survive. Let me leave you with this. The market doesn't care about your predictions. It doesn't care about your feelings. It only cares about positioning and capital flows. Right now, capital is flowing towards safety, treasuries, defensive sectors, cash. That tells you where institutional conviction sits. But flows can reverse in a single CPI print. They can reverse on a single Iran headline de-escalation. The question is, are you positioned to survive the downside and capture the upside? If this breakdown helped you understand what's actually moving markets, not the surface level headlines, but the real mechanics, then subscribe to this channel right now. Hit the notification bell, because when CPI drops tomorrow, I'll have the instant analysis before most people finish their morning coffee. Subscribe, prepare, and I'll see you in the next one.